Hello, this is Brian Resnick, President of Resnick Wealth Management. I'm here to bring an important update about the economy and the investment markets. We had the Greek elections on Sunday, and the results basically came out, and the better of the two bad parties basically re-emerged or emerged, however you want to put it. The party that was kind of re-elected seems to be the same party that got Greece in trouble over the last decade or two, so whether or not they're really going to help the situation, I doubt it. They really are for being bailed out. That's kind of what this party's all about. They're for staying in the euro. So basically they're going to need more debt, more support to basically put more debt on debt they can't pay. Obviously, that doesn't solve the situation. Greece is in a really bad situation, and ultimately, will they leave the euro one day or will they be pushed out? That's anybody's guess. Their economy is relatively small to the world economy, but it's going to have a ripple effect unless they keep getting these bailouts, which again, they can't pay. Other countries like Spain and Italy obviously are in really bad conditions. Spain has got unemployment close to 25%. During the Great Depression that we had in the United States back in the 20s, we had 25% unemployment then. Spain is in the exact same scenario now. They've had runs on the banks. They continue to get that. Their bond yields are approaching or at over 7%. This is a very bad sign. The more interest rate that they have to pay, exponentially, it increases the risk to them. They can't pay the debt they have, so obviously they need new money. They have to lend it out at higher rates, which even puts more of a hamper on any kind of recovery. Ultimately, Spain's going to probably, in my guess, implode unless they keep getting these bailouts from the EU and all the other banking systems in the world and everything else. Debt upon debt doesn't solve a problem. Italy's probably going to be the next one in a row. You've got Portugal, you've got Ireland, you've got other countries out there that are in severe problems. France got downgraded on their credit. And again, these are all troubling signs that the Europeans need to get their house in order, and they keep kicking the can down the road and nothing really gets done. I've heard more rumors about what they're going to do in the last 4 weeks than I think I've heard in the last 2.5 years within the European nations. Until they actually have a concrete plan, it's set in stone and it's done, we're probably going to see some of this choppiness in the market. Hence the reason why we are very defensive now. Our global tactical opportunity portfolio, we look at relative strength, put us in more defensive sectors at the beginning of June. Now that may reverse, it may change towards the end of the month if we keep getting these little bit of these market rallies. Underperforming a little bit year to date on our global tacticals. That's going to happen from time to time, but we're positioned for safety. We are concerned about protecting client principal, and yes, we're looking for upside, but if things do start to deteriorate and slow, we're going to be good beneficiaries of that slowdown. If things actually come out with a master plan and things look a little bit better, then we'll have the upside potential, and our global tactical will readjust into those sectors that are relatively stronger, and it will get us out of defensive sectors that we're currently in. I think most investors right now, in my opinion, should be more cautious within what they're doing, and the simple reason is this: the U.S. economy is slowing a little bit. GDP growth, I think, will be ratcheted down this year, down from 2% maybe to 1 to 1.5%. We are definitely seeing signs of slowing in the U.S. because of what's happening over in Europe. Now the key here is, again, if Europe officials get their act together and have concrete plans really to stabilize the whole continent, and everybody seems to be leaning on Germany to basically bail everybody out, and I doubt at the end of the day Germany's going to want to put up the kind of money, nor do they even have that kind of money to bail everybody out. So again, it's kind of a bad situation. We're going to monitor it closely. We're going to be defensive when we need to. We're going to be more growth oriented again when we need to be. We're going to follow our global tactical leaders, and we're going to be put in those areas that are going to be most rewarded currently based upon what's happening in changing economic climate and market conditions. If you have questions about your portfolio, if you're a client, of course, call our office. If you're not a client and you'd like to become a client, call our office for a consultation. Big announcement, by the way, our TV show, The Resnick Wealth Report, officially starts airing tonight on Comcast Channel 9, Southwest Florida. We are working on the East Coast of Florida. We haven't finalized any deals yet, but we are working on the East Coast of Florida. But right now, our official program for the Resnick Wealth Report TV will officially start airing tonight at 6 p.m., and it will be rebroadcast on Channel 9 Comcast on Sundays at 7:30. I invite you to watch, and if you do get a chance to watch our show, let us know what you think of it. Every week I'm going to hit hard topics, discussions, and educate investors on what they should and should not be doing with their money. Until tonight's show and until Sunday's radio show, make sure you have a profitable week. and a safe one. This is Brian Resney.